Welcome to IN60, where my guest is Karl Dasher, President of Polen Capital. Welcome, Karl.
Hi, thanks, James.
It's a great pleasure having you here from the United States. Karl, I'm going to ask you a series of short, sharp questions. We're after short, sharp answers. You can pass at any time, and your time starts now. Karl, what word would you use to describe the global credit market right now?
Well, I would use two words: rationally priced. I think we've already overshot the mark in terms of where Fed policy should be. And I think people are obviously factoring that into the credit spreads and the term structure, and it's created a market that is very favorable for credit investors.
What's the biggest driver of return in credit?
Always the biggest driver of return is going to be not just the spread, credit spread and yield, but how much of that you retain. How much do you retain after defaults and recoveries? That is by far, that's 98% plus of the returns.
What's the biggest red flag when assessing an issue or issuer?
Biggest red flag is misalignment of interest between management, equity owners, and debt owners.
Baseball, football, or basketball?
I'm a footballer by birth. I love all sports, but football was my game, and I love it. It's like chess on steroids.
What's the thing that a credit investor most wants to see?
I think what credit investors want to see is they want to see a steady level of income that they can count upon with relatively low volatility, but also with an understanding that in times where you do have periods of stress, that there will be a recovery on the other side, that you'll have a makeup period that's not too elongated. So the ability to draw back to the high water mark is relatively truncated.
Right now, are rising stars outnumbering falling angels, or is it the other way around?
Other way around, falling angels. Although we haven't really hit a really hard fallen angel path yet because the maturity wall hasn't really hit us in terms of companies needing to restructure. But we are seeing at the margins, credit rating agencies getting ahead of the curve and starting to push down the ratings of companies in anticipation of what they're seeing in terms of cost of capital increase.
It's November 2023. The official US rate is at the 5.25% to 5.5% range. Does the Fed have another rate rise left in it?
I hope not. I think they've already overshot the mark, and I would be in the Raphael Bostic camp and a few others that says that we need to let what's already been done work its way through the system.
Right now, is credit or loans a better place to invest?
Well, when we look at credit, generally we look at both loans and bonds, and we have earlier this year we were very overweight loans to sort of our max limit. We've started to pull back a little bit more into bonds because of the fact that we do think we're nearing the end of the cycle on the rate hikes.
Would you agree with the statement that 4 is the new 0 and 10% is the new 6%?
I wouldn't say 4 is the new 0. What I would say is I think we're going to return to a more normal type of structure going forward, where it used to be that 3 was the neutral, and then plus or minus 1 to 1.5% was what the Fed would use. I think we'll get back to that as opposed to 4 is the new 0.
Karl, you're offered a fortnight off, free tickets for 2 to anywhere in the world. Where are you heading?
Anywhere I can be with my wife. I spend probably half my time on the road. I miss her a lot, and we just like being together. So just send us to somewhere in the country where we can be alone and enjoy our time together.
Great answer. Thank you very much, Karl Dasher, President of Polen Capital.